You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 8th. I'd like to share some thoughts about real estate. Imagine putting down this massive pile of cash, like up to 70% of a home's value, just to rent an apartment.
Right, which is just a wild concept if you're not used to it.
It is. And then, finding out you're suddenly priced out of your own city because these massive urban overhauls have just completely ground to a halt.
Yeah, it's a really frustrating reality. I mean, for foreign investors who are modeling supply or even expats just trying to sign a lease in Seoul right now, the ground is shifting incredibly fast.
Exactly. So today we're taking a deep dive into some recent reporting from the Seoul Economic Daily. We really want to figure out why Korea's fast-tracked redevelopments are stalling.
And also how the government is, stepping in to try and bail them out and what this actually means for your commuter map.
Right. So let's unpack this, starting with the structural fractures.
Well, the perfect place to start is Gyeonggi village in the Bundang district. So this was supposed to be the crown jewel of the first-generation new town integrated redevelopments.
Was supposed to be.
Right, supposed to be. Because this week, the residents abruptly fired their project executor, which was Korea Land Trust.
Wait, they fired the trust company? But I thought the whole point of the Shintak Bangsik, or the trust model, was to speed things up.
It was.
Like, weren't they supposed to replace those messy resident cooperatives with professional financial firms?
Yeah, that was definitely the goal. But here's the flaw, right? Resident factions are bitterly split. You've got some who want independent settlements and integrated sales, and then others who want in-place reconstruction.
Oh, wow.
Yeah, and as you know, trust companies are strictly financial executors. They don't have a mandate to absorb litigation risks when residents argue. They just freeze up.
Ah, I see. So they're essentially like calculators.
Exactly.
They're fantastic at the project math, but they are absolutely terrible at family therapy when the neighborhood starts fighting.
That is the perfect way to put it. And what's fascinating here is the execution risk this creates. Well, there's a revised special law hitting in 2026, which means a single complex voting no can basically derail a massive project.
Right.
So for you as an investor, if this gridlock holds, the government's target of delivering 63,000 housing units by 2030 is severely at risk. You'd have to start revising your Seoul Metro supply assumptions downward.
So if private developers are stalling out and future supply is threatened, the government has to step in at some point, right?
They are trying to, yeah. The ministry just launched what they call the Future City Fund, which is backed by the Korea Housing Finance Corporation.
Okay, and how big is this fund?
It's a $600 billion injection, so roughly $420 million US dollars. And they're offering a discounted 3.7% loan rate to try and lower the cost of capital, to get things moving, which undercuts the 5.3% commercial rate.
But wait, I have to push back on that.
Okay.
I'm looking at the early stage loans under this fund, and they are capped at 20 billion won, which is only about 14 million US dollars. If I'm an institutional investor looking at a flagship mega site like Bundang, $14 million barely covers the demolition.
It sounds completely absurd on paper, I know. You're exactly right. I mean, the intention was likely to spread capital across mid-sized projects.
Sure.
But it basically leaves those massive flagship urban overhauls you're watching completely stranded.
So if developers can't build, and the government's $14 million Band-Aid isn't nearly enough to fix the mega site supply issue, what happens to the people who just need a place to live right now?
Well, that's where the pressure cooker explodes. As we mentioned earlier, Korea's down-to-buy lease system requires a massive upfront lump sum deposit.
Right.
But what's unprecedented right now is the velocity of the price increases. Jose prices are actually up 2.61% year to date.
Wow. Wait, that's like 5 times the pace we saw last year, isn't it?
It is. 5 times.
And why is it accelerating so fast?
Because of that frozen redevelopment we just talked about. Supply is constrained, so panic sets in. Renters are just offering higher deposits to secure whatever limited housing stock is actually left.
Oh, man. So it just bleeds directly into the purchase market?
Exactly.
Huh.
High G&E prices, combined with strict new mortgage caps, are aggressively pricing out young buyers. They literally cannot afford Seoul.
And here's where it gets really interesting. Because they're priced out, we are seeing a massive 59.1% surge in Seoul residents buying homes outward.
Right, in Gyeonggi commuter cities.
Yeah.
Places like Gangnam and Gyeonggi.
Yeah.
If we connect this to the bigger picture, you can really see the ripple effect. Seoul prices are broadening outward across multiple districts.
Except for Gangnam.
Interestingly, yes. Gangnam is the only district where prices are actually falling right now, as older complexes there absorb these late-cycle distressed listings.
Right.
But for an expat renting or trying to buy in Seoul right now, you are directly competing in a dramatically tightened market.
So tying this all together, what does this actually mean?
Well, it raises a really important question to leave you with. If prime urban redevelopment in places like Bundang stays completely gridlocked,
Yeah.
and younger buyers just continue fleeing outward to escape soaring Jones and strict loan limits, will the real growth engine of Korea's property market permanently shift away from Seoul and into the suburbs?
That's today's AI Prism, Real Estate. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Wanyurai award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.